Welcome to TradeTheMGuy.com. This is John's reports for the 10th. Well, the other day we saw a little move back again. We're having this pivot right across the 50% line here in this broader decline move. We had a nice reset here with the, green over red, which is midterm buyers over long-term as well as short-term buyers. Created the push that sort of faded off a little bit when you really couldn't get a crossover of cyan to green. Now they've pretty much plateaued, and I call this my little version of a duckbill, where it's just kind of sideways flat, and we've had fairly weak shakeout within it, but it's been enough to support. Oddly, we haven't had a burst of the 13 point, the red DOC here moving above 13.5, getting us into a new zone, which is sort of limiting the ability of this to break out or do anything. But the volatility's been awesome. No objections to it. 50% now, dropping just a fraction. Again, this is so close to that 2905 algorithm line, and then at the bottom end of it we have the 80s, and then it gets into like 77 in that, which is some of the ranges that we've just been filling back and forth for the last week plus. So all a good dynamic. We can see, though, there's a big difference, though, in the NASDAQ. This rejection of cyan green, if you get green moving below red, I think that we would expect to see more weakness out of the NASDAQ, significantly more. The saving grace for it is rising steel as opposed to the steel crossing below cyan, which would be, I would think, the death nail in the move, and that would certainly turn things around. And the euro getting its buy as the optimism grows that nobody is willing to allow for a no-deal Brit exit, that somehow there is going to be an agreement. You've had some of the German automakers warning about the impact that it would be on them if the no deal went through and the Brits decided to do their own tariff at a much lower rate than the EU's current VAT, and how devastating that would be for them. So they're trying to give excuses to make some kind of deal happen. Oil standpoint, maintaining at its lows, so it hasn't broken below, so there's still a degree of optimism here that we're not going to see a cataclysmic decline. Some of this is the politics of what's going on in America in general. I think it'll take a little while to see if people begin to freeze and paralyze activity, future hiring, and things like that. We should know by the holiday season, because that really will tell whether or not we're seeing a significant pullback out of fear for the uncertainty going into an election year. And gold. We would still expect that that's going to catch a bid and really make a move. From an intraday standpoint, I had posted early on right about this one right here and said, hey, we were looking at a potential for a decent reset for a new buy. It took just a couple more bars, and there it was as it turned around. We got the crossovers, and it took off. Made some crazy bounce all the way up there, and then that just sold off, and that became kind of the range, and that was right around that 23, and that's the same spot. It's been there for quite a while, and we ended up with this DOC, kind of an ugly one. This is sort of like what I call just sort of I don't even have a name for it, because it's just unpleasant, because you've got the steel under the negative 13, so as soon as it moves back above, you're going to end up with upside pressure, so it's just, you're not going to get a whole lot from the equation, but it's also not something that's, a buy, so you just have to kind of wait it out. You get the clear indication here when you get the crossover of the steel, and then boom, it crosses below, the orange comes up, green crosses below red. You get them all right there, and that one produced just a modest move, because it literally turned around pretty darn quick right there. Though you had the dip below the red line, so the expectation was that even if this popped a little bit, it was going to come back to the lows, which it in fact did, and made actual new lows right at that, just above that 2905 level, but keeping it above the daily 50%. So still bullish from that broader standpoint. And then leveled out, rising DOC. If first you have the dip back here. Absolutely, you can take the buy early in this particular case. Though we've pointed out that, the stronger that DOC red move is, the better off it is. Once the green reaches it, so even a bar earlier, right at the 23%, boom, and it takes off. And then we end up with, again, a series of these cyan moves above red, but with no steel cross above and below for DOC spread. A little bit less dramatic until we get this big spike. And came after this other previous BK reading there that popped in, and that one actually produced a bit more of a decline. It kind of left us in a decline mode throughout the rest of the session. As we came to the close, we ended up with this buy configuration, but with zero reset, zero pop from underneath. I don't even blink at that one. It's almost, to me, I'm just looking for the next bounce or resistance level to short at, and I knew it was a 23. Didn't get filled in those because it didn't reach it, but I mean that's sort of like almost a freebie at that point. And then it was pretty dramatic post market, fears of a China fade out or whatever, and we just cleared all the stops, swiped out positive extremes, you name it, and all the way down to just above that 2880 algorithm level previously. That produced the buy. That shot it all the way back up to a net zero, and then we've just kind of been bouncing through. I didn't even mark these because it's sort of like one of those. This is pretty active though for a pre-market to have this many bars already. Normally we've got maybe 6 or 7 coming through at this particular time. So lots of activity, which again, like we were saying, start of October, we were looking for volatility to be the king, and here it is. Enjoy. Interestingly enough, we do have a dip below the red line right back over here. Should be interesting to see if that fills back in, because if that pulls back all the way in there, I think that would be enough to significantly give us a bearish reading on a daily. So I think it's critical at this particular juncture that those that support the market are going to keep funds flowing into it. That they've bought this whole thing back up, it's kind of an indication that there's still plenty of enthusiasm to be in equities, which is interesting given the turmoil. So we'll just keep playing with the swings of it and follow our readings, which have been pretty good. As always, though, trade well. We'll talk to you later.